Hey everyone, I hope you've had a good week this week. My name is Jake with Jake Trades and Invests, where I do a weekly video of where prices for the main indices and commodities have gone, as well as where I think the prices may be headed in the short term to medium term. So with all of that said, let's go ahead and jump into our first chart, which will start here with the dollar index. So this week we've continued to just consolidate in our support zone that I've been talking about over the last couple of weeks here. This support zone runs back to around 2010, 2011, where it started, and the prices have come down into that zone a couple of times over the last uh, 13, 14 years. And we're back down to that support area now, and it looks like we're just consolidating in that zone. What I'm thinking would happen, which would mirror what has happened in the past, would be we get a bounce out of this zone, maybe back up towards the moving average, and then come back down and retest it. And either from there, depending on how the price tends to react, we'll either bounce back out of that zone or we're going to fall through and continue to the downside. My current thinking is that the dollar is going to continue to show some weakness, um, just because of whatever is going on in the background with politics and the uh, the economy, and all of the debt that's going on, with the Fed. Um, so my thinking is we may get some kind of short-term bounce here, given that we've been selling off for quite a bit, and we are in this support zone. I'm thinking we'll get a bounce, and then eventually we will fall through this support area to continue to the downside. What that would mean for gold would be continued strength. So right now, gold has been consolidating between 3,200 and the 3,500 highs, just in that area for now. Um, so I think we may continue to see a little bit of consolidation going on in this area in the short term. Right now, we've kind of fallen down and given a little bit of a bounce here at the moving average. It's possible we'll push back up towards 3,400 this week, and then continue to fall if the dollar gets the little bounce that I'm thinking is going to happen. However, gold could just continue to pull back down towards 3,200 again. But for now, I think gold will probably stay within that range in the short term. But ultimately, I think gold's going to continue higher. As for silver, we had a good push up this week in the shortened trading week. We're back up towards that $37 mark. But like gold, we're continuing to just kind of consolidate. We have broken out of our resistance zone, and now we're just consolidating above that area. There are a lot of buying wicks here at the bottom in that $35, $36 area. So I think if prices come back down below $36, that's just another good opportunity to buy before the price continues to move to the upside. Looking here at the weekly chart, we've got plenty of space overhead to get back up to our $50 all-time high prices. And there's not a whole lot of resistance in this area. So I think we may see a little bit of consolidation continued in the next couple of weeks before pushing higher. But ultimately, in the medium to long term, prices look good to continue to rise. So if you get the chance to buy into some silver below $36, that could be a good buying opportunity. And maybe the last time the prices will be below 36 for some time. As far as platinum goes, continuing to see buying coming into platinum. Over the last couple of weeks, I've kept talking about how I think platinum's going to consolidate and maybe even pull back. We are kind of sticking around this $1,400 area, but every time we get a big selling candle, we end up just pushing right back up above it. So we've had some selling candles in the last couple of weeks, and the prices have continued to hold above or around those prices. So I think for now, we are pretty overextended, and there is some selling on a weekly looking at the weekly charts, they're selling in this area around 1400, 1450. You can see all these wicks here at the top of these candles. So I do think some consolidation is necessary after such a large push up over the last couple of months. Doesn't mean it has to happen, but I think some of this momentum has to cool off. So I think we're in for maybe a couple of weeks of consolidation in this area for now before the move continues to the upside. All right, for copper, so currently this week we ended the week selling off, and it's possible we're going to come back down and fill this gap around $4.90, which would be okay. That would be a good buying opportunity in my opinion. I think all of the metals are looking good. If they start to pull back, it's a good buying opportunity to add to positions or to get into one before the prices continue to move up. So I'm thinking copper may pull back this week into this area. We've got the 50 moving average coming up below that area to act as support, as well as this longer term support zone we've got in that area as well. So in my opinion, I think that would be a good chance to buy into copper before the move continues to the upside. Looking at the longer term chart, it looks like prices could eventually work their way up into the $6.50 to $7 range just in the short to medium term. Obviously, it can continue to go a lot higher than that, depending on the economics behind the moves in copper and all of that. But I think for right now, it looks strong, much like the other metals. And if weakness continues in the dollar, I think copper will continue to work its way up, following the other metals as well. Now for crude oil, we talked about it last week about this large selling candle back down towards the $64 range. This week looks like we've tried to start pushing back up and get some momentum back into oil, and then we had a couple of small selling days to end the week, but looked like buying was coming in on both of those candles. So I think for now we may see some more consolidation in this area for oil. But if we can get some momentum back behind the price and push back up, I think oil looks good to maybe reattempt this breakout that was kind of thwarted 2 weeks ago. We've been squeezing into this triangle pattern here, and then we had kind of a false breakdown a couple of months back where we hung out below $70 or $66, and then a couple of weeks back we pushed up pretty strongly and then immediately sold right back off. So to me, that's showing a little bit of manipulation when we tried to break out, and I think ultimately the price is going to work its way higher. It's just timing it. No one can predict that timing, but it does look like it wants to attempt to get moving back to the upside. So we'll see in the coming weeks how oil is handled and see if the price can get back above this resistance zone here. Moving on to natural gas, we're still kind of holding around $3.40, right above our 200 moving average. So we're still kind of consolidating sideways a little bit. We've had quite a bit of selling over the last couple of weeks, and we're back below the moving averages, the 50 and the 100 moving averages. So we're kind of stuck between the 50 and the 200 right now. It's possible prices may sell back down towards $3 again in the coming weeks, as natural gas really isn't in high demand during the summer. But that could be a good chance to get in at a low price before the prices move back up heading into fall and winter, as inventories start to get drawn upon. So I think for now, it looks like natural gas may continue to pull back some, but I don't think that's a bad thing. I think that could be a good sign heading into the fall and winter months. So we're just kind of chopping sideways, it looks like, for now. So keep an eye out for $3, but if we don't fall that far back, in my opinion, natural gas looks pretty good where it's at before another bounce to the upside. Now for the S&P 500, we have hit new all-time highs this week at 62.84. The momentum has continued to push up over the last couple of weeks. Everything is looking pretty strong right now in the S&P 500. As always, things can happen, and we have all these gaps below that I've talked about over the last several videos I've made. These gaps have not been filled, and they historically tend to get filled at some point. So as of right now, all signs are pointing to continued bullishness to the S&P 500. We've hit all-time highs, so I think prices will continue to move in that direction as time goes on. Obviously, there will be pullbacks and consolidations, but the momentum seems to be to the upside right now. Same story for the Nasdaq. We've hit a new all-time high at 22,000, just under 22,900. So like the S&P, I think the Nasdaq's going to continue to the upside for now. And again, pullbacks and consolidations are going to happen. They're inevitable. So I watch for those. They could be good buying opportunities as long as the price pulls back maybe towards moving averages and consolidates appropriately above those moving averages. It could be a good time to buy. For the Dow Jones, we haven't quite made it back up to our all-time highs, but we're just sitting below them. So if momentum continues into this week, I think the prices could definitely hit the new all-time highs into the week. We are looking a little overextended from our moving averages. So again, pullbacks and consolidations can happen. I would look for 44,000 to be an area of support, as it's acted as a little bit of support and resistance earlier in the year. So that could be a good area. If the prices fall towards that price and consolidate, that could be a good chance to get in if the prices seem like they're going to hold around that price point. And then we're going to look at the Russell. We also have not reached anywhere near our all-time highs yet. We still have about $200 to go before we get back up to those all-time highs. So for now, the Russell offers a lot of opportunity to the upside, but right now it's looking a little extended above the moving averages. So like the other indices, I would maybe wait for a pullback before trying to find a position to get into. It looks like 2200 to 2175 could be a good area of support in the short term, as there have been some touch points in the past around that price range. So it's likely we'll continue to push up in the short to medium term, much like the other indices, but I would wait and see if we get some kind of a little bit of a pullback before trying to get in, just to get a little bit of a better price. All right, and we'll finish here with Bitcoin. Bitcoin looked like it was trying to break out a little bit above this flagging pattern that I marked last week, and then we kind of sold off on Thursday before the holiday. So for right now, it looks like Bitcoin is still going to continue to consolidate a little bit. Again, this lines up with if my theory about the dollar is correct, where we're going to get a little bit of a bounce in the coming weeks. This aligns with gold kind of consolidating and pulling back in its area that it's in right now. The same with Bitcoin. We're kind of just consolidating sideways right now. So if we do see a little bit of strength in the dollar this week or in 2 weeks, I would expect Bitcoin to continue to consolidate here for now. But given that that Bitcoin is just another asset for safety from the dollar, I would think if the dollar continues to weaken, we will continue to see Bitcoin pushing higher in the short to medium term, much like gold and silver, platinum, copper, all of the commodities. So that's the analysis I have. So that's everything I have for this week. If you like the content, please like the video. Also subscribe to the channel. I'd appreciate it. And if you haven't watched last week's video, please take a look at that and see how the analysis held up for this week. And as always, I'll see you again next week. Thanks.